All right, good morning, guys. Welcome to today's trading dose session. Okay, so today is the 10th of February. So, let's take a look again. As usual, what we're going to do is we're going to look at what are some of the results that we had based on the trades we talked about yesterday. Okay, and then we'll look at today's market for any new opportunities for intraday basis. Okay, now for yesterday's session, the only trade that we had for a pending order, okay, is the Aussie dollar, and this trade here actually did not get involved. Just to show you that, okay, and basically we have canceled that pending order. That's what usually I do, right? Of course, it's an intraday basis. If yesterday the order didn't get triggered, I'll just remove the pending order. I'll redo my analysis, okay? So something for all of you to take note as well. If you're actually following through this trade ideas, you might want to also cancel your pending order. Okay. Now, however, there's some outcomes of the other two trades. Okay, and those two trades, of course, is not based on yesterday. Okay, the trade, one of it is taken on Monday, which we don't run the trading dose on Facebook Live. Okay, but I still come in, quickly scan the market for opportunities. We talked about this yesterday as well. And the other one was actually dollar CAD. That trade was based on last week's Friday pending order. Okay, and it was triggered. So if you are not in these two trades, never mind. Okay, no worries on that. You don't rush into it. You don't have any emotional attachment to any of these trades. We're just gonna move forward and look out for new opportunities. Okay, but just quickly walk you through some of what is the outcome of this. Okay, and maybe a mini lesson here or two about how we look at and manage the trades. Okay, now if you take a look at this here, you can see this is a blue line, basically means that's a buy order. Okay, so I showed you that this trade was triggered yesterday as well. Okay, we got in on a buy. The reason was based on godly pattern. If you want to understand more, just watch the recording yesterday. And we do see a bit of drawdown, and then after that, it went back up to a almost close to 40 pips. Okay, to be exact, that's about like 36, 37 pips. It was very, very close to our target, right? Our target was about 50 pips. So that's like another 15 more. And that's where I shift my stops to break even. And you can see after that, it came back down. It tagged us out at break even. We got out at 0 pips profit or loss, okay? So this is a break even trade on the dollar CAD. The other one is, of course, the dollar yen. Yesterday, I also showed you on this trade, and I also talked about why we entered on this. And you can see this is a red line, which means we sold. This trade hits our target profit here. Okay, so that's about 59, close to 60 pips, right? So pretty good, pretty decent. This was quite an easy trade. Again, get yourself familiar with the setup and the reason as to why we take this trade. Once you acquire the skill set, you'll be able to, use this as long as you want, right? Once you acquire a skill set, nobody can take away from you. Okay, so quick one over here. As of now, we do have two outcomes for this week. Okay, one is the dollar yen and the other is dollar CAD. So we are up by about 60 pips for now. Okay, so let's take a look at today's market and see if there's any opportunities that we can capitalize on. Okay, so far, as of up to today, I think the analysis, the anticipation on the dollar has been working out as what I've anticipated. The dollar is indeed weakening. You can see all the major pairs are moving. Okay, so we'll still hold on to that bias for today. Okay, which means that everything seems like the dollar is still gonna be continue weakening. Okay, we do have, like, for example, the euro dollar here. We do have a very obvious uptrend as well. So we're definitely gonna be using like trend following strategies, right? Okay, so right now, let me just do a very quick check if that's something we want to focus on. Okay, now trend following strategy is a very simple, based on structure, based on a bit of fit, based on camarilla level. We want to see if there's any confluences around some key zone. Okay, and right now, if you take a look at this, there might be a bit over here. Okay, it's not the best because you are lacking a camarilla, but you do have 618 Fibonacci retracement with some minor structure here and there. Okay, yeah, right. So you can see even on a higher time frame, you do see that, okay, this is pretty much a previous significant structure. If price comes back down, perhaps that's a key area that we want to keep an eye on. Okay, Let me do a quick check on that move as well. 50 plus 60. All right. Okay. Now, this is also another thing that perhaps you can pick it up is that we want to understand the average day movement. Okay. Each pair, the average daily range is slightly different. Okay. So as an intraday trader, right, it's also important for you to factor that in. Okay. Give me a moment. Okay, now I was saying that it's important for you to factor the daily range in because you want to know whether there is the anticipation of price coming to your entry or hitting your target. Okay, so that's pretty important psychologically for you to be prepared mentally. Okay, so if you take a look at where current price is to where we want to enter, that's about like close to 60 pips, right? So Euro dollar itself, the average daily range is about there, right? 70, 60, sometimes a bit smaller, but on average, it can move a day 60 to 70. Okay, so having that in mind, I wouldn't be too keen to place an order here today. Okay, for one reason, okay, because if today is going to exhaust a 60 pips move, then likely we can still come back in tomorrow to take a look at the chart and still put in that order. Okay, which is exactly what happened on Aussie dollar, right? So you can see it didn't really play out as what we want. Price didn't come down to a pending order. No, then today we can have the time to reanalyze it and make the decision again. Okay, so for that reason, I would put this aside for now. Okay, though I think it's pretty solid in terms of the structure. The thing that really didn't have me pulling that trigger now is the camarilla level isn't there. Okay, and of course, price right now is still close to the top here, so I'll just put this aside. Okay, pound dollar, the next one, you can see price is indeed breaking higher, right? It has actually broke off this structure. Okay, so as of now, I think we are definitely gonna focus on the buy side, that's for sure. Okay, but looking at this now, okay, there isn't any buy level that we can really focus on. Okay, so very similar to the euro dollar, you can see that the current market price is at the high, very near to the high. So even if I pull a fit now, okay, the idea here is that if this continue going up, then your fit needs to readjust a little bit. Okay, some of you would like to see that. Okay, there's a confluence around the 38.2 with an L4 camarilla a bit on the structure level as well. Okay, now I wouldn't take a 38.2 retracement for my trend following strategies simply because the risk reward from a short-term intraday basis is not worth it. Okay, very simple reason, right? If I enter a trade to where I'm going to put my stop, am I going to put it here at 618? Am I going to put it at below the previous structure, or am I going to put it at 50? Okay, so too many options. And of course, if I put it at 618, what if the retracement comes down at 618, tag me out, and then keep going higher? Okay, then it becomes an unnecessary loss, right? If I put it at the previous low, then my stop is like super wide, okay? Then why would I want to do that as well, okay? So that's a very simple reason for me not to take a 38.2 retracement trade. Okay, I'm not saying that it doesn't work out. It's just my personal preference. I don't take it. Okay, so next up is the Aussie dollar. Okay, so very quickly and immediately what you see over here is a divergence forming on the Aussie dollar, right? So every time you see something like this, you know, okay, short-term wise, there's a potential coming down. But would I take this short? The answer is no, right? Because again, where is this divergence happening? It's not really at any high or key structure level. So again, it's not just all trades you're gonna take whenever you see a divergence, right? You need to have a bias. You need to know where is this divergence or pattern happening. Okay, so for this year, I will not take the sell, but I understand that, okay, perhaps short term, this can come down. Maybe I will be more keen to look for any buy opportunity after the retracement is done, right? Which in line with this 1 hour trend, right? You can see higher high, higher low is definitely going to the upside. Okay, so for today, I wouldn't put in any order. Okay, I don't really see a nice confluence as of now. Okay, perhaps the 618 is okay, but I would say Yeah, right. There's no need to rush into it. I would like to give it another day and see how it goes. Okay. So most of the time, what you observe is that when the market starts to trend and starts to move, like for example, yesterday, most of these pairs are moving to the upside already. Okay. Usually the next day is where you wouldn't have much opportunity because it's already moving at, like the trade has moved, right? You wouldn't want to jump onto the middle of the track trying to catch on to it. What you want to do is wait at the next station or wait for the next train to actually come, and then you board it. Okay, so same concept, same idea over here. Okay, New Zealand dollar. Okay, so let's take a look at this. On the higher time frame, it's still in a range environment. On the 1 hour time frame, is not really clear, right? You can see we are at the upper boundary of the range for now. Okay. So if you still remember, we talked about there's a potential butterfly pattern. Okay, or I would say there's also this godly pattern forming over here, right? If you still remember, we talked about that. So let me check in terms of confluences. Do we have anything coming in? Okay. That's pretty okay. That's okay. So the butterfly pattern completes at 127. We do have a minor kind of like H5 confluence over there. Let me pull this godly fit as well. Okay, the godly comes in at 786, right? Just to be a bit precise. Okay, that's about there. Let me also measure the internal 127. All right. Okay, so this is how we're gonna do it. I'm gonna put in an order on this godly or butterfly, whatever pattern that you actually are more familiar with. To me, they are more or less similar, right? So the entry level is somewhere around 7285. The target here is around 7316. Okay, just above this high, and of course the target TP. Okay, let me just do a quick check. Okay, I'm gonna use a camarilla to help me on that, right? We're just gonna put it here. Yeah. Okay, that's pretty good. Okay, so I'm gonna put in this. Let me just draw in that butterfly. Right, so it looks this. Let me take a screenshot. Right, so I'll put this into the PowerPoint as well, right? So this is on New Zealand dollar. Okay, so the trend is obviously in the range, right? You can see over here. So we'll be looking to take the harmonic pattern strategy as sell limit. 7285. Okay, the stops is at 7316. Okay, and the target here is 720. Okay, for now. Right. Okay, so let me place that in as well. Okay, so that's the trade. Good. Let's do a very quick check. What's the range? 30 pips. Okay, good. All right, so this is the trade for today, trade idea, right? Let's quickly take a look at some others. Dollar CAD as of now, I talked about this in detail yesterday as well, right? Why we want to see if we can still get out, and then it's still bearish right now. Okay, so for today, there's really no trade. Okay, to sell it, there's no setup. Okay, so we just keep next. Okay, dollar yen. Okay, so the idea here is yesterday you do see this divergence and it broke this neckline, right? So for those of you who have been following some time, you know that we do have another strategy to trade that divergence, the break of the neckline. We have a strategy to trade the retracement. Okay, and this one here, basically what we do is we just pull the Fib from the top to the bottom, and then we try to see if there's a confluence, right? In this case, can you see there's a confluence of 618, H5, and the previous neckline? Okay, so that will be the key area that we'll keep an eye on. If price were to come up, okay, we'll have a decent short opportunity. Okay, so you take a look at this right here. I'm measuring the range of where price is to where we are looking to enter. That's about 60 plus pips. Okay, so it's just same case as what we talk about euro dollar. Okay, that's about the maximum average daily range of this particular currency. Okay, so I wouldn't personally be too much in favor of putting in the order now. Okay, I would be a little bit conservative on this. Okay, Kiwi dollar, of course, you can see here, that's about 50 plus. It's also quite borderline, right? Usually the major pairs move about like on average 60 to 70 pips. Okay, so dollar yen is pretty much similar to euro dollar idea. Okay, I would likely, no, we can put in an order, but likely it's not gonna happen, and then tomorrow we'll come back in and reassess it. Okay, so I for now today I won't put in that. Okay, but just to keep you out guys aware, okay, there's this potential over here. Okay, you can also keep an eye on it. Okay, next up here is on gold. This is the last one that we are monitoring, right? So gold over here, you can see is pushing to the upside. Okay, I shared with you yesterday as well why I'm not a person who loves to trade gold, at least for the short term. So if you ask me today, there really isn't much of an area. Okay, perhaps the confluence coming at 786, where you can see the L5, the previous structure high here, is definitely in an uptrend, at least for the short term. Okay, and of course, where your stop's gonna go is below this. Okay, your target, you can put it, you know, the H4, the H5, I think that's pretty okay because you're looking at a trend environment, right? So you can see a decent risk to reward, but again, because of the volatility of the commodities like gold, based on a short-term basis where I don't monitor the market too frequently, I don't usually like to take these trades, right? But of course, some of you are, you know, you love the gold, and of course you have the capacity to monitor trades, monitor market, you're okay with handling that kind of volatility, then by all means, you know, whatever works for you, as long as you are able to make money off the market, right? It works for you, best. Sticks to it, keep improving on it, right? That's the idea here. Okay, so for today, really the only one trade that we're going to look out for is New Zealand dollar. Okay, I think euro dollar and the dollar yen is potential, but I will put it in for today's sharing session over here. We'll give it another day and we'll see tomorrow what happens. All right, so quick recap for today. The only pair that I have an order in is the Kiwi dollar. Okay, and let's see how this trade goes. Okay, so again, you realize that I'm not here to rush into any trade, or I'm not here to force a trade in. Okay, your role as a trader is not to have trading activity all the time. Okay, though the name says you are a trader. Okay, but the idea here is you want to focus on quality instead of quantity. Okay, you don't really need a lot of trade. Now, if this week there's no trade and only one trade that I can bank, let's say a 60 pips. Okay, I wouldn't complain, right? Because if every week on average you can capture like 50 pips, 60 pips plus, okay, positive about 50 to 60. Of course, you net off some of the negative weeks. Maybe on the average you get about 50 pips a week. Okay, that's pretty okay, right? Because if you put it in a month, that's about close to 200 pips. That's a very decent profit. Okay, you don't need a lot of trades. Okay, so that's the idea and the message I would like to send across. All right, so that's all for me in today's trading dose session. Okay, hope you guys have been benefiting, enjoying this, learning from it. I think that's pretty important as well. Okay, just let me know in the comments below, you know, if there's any specific things that benefit you, I think if you share in a comment, it will let me know. Okay, and it's just letting me know that at least what I'm doing here is able to help at least one of you. Okay, I think that's very important. Okay, to me, again, I always say, right, whatever I do, I don't need to reach like a million people. If I can benefit and impact one person's trading journey positively, I think that's worth it, right? One person, that's all I really care. Okay, but of course, if I can hit more people, I can reach out to more people and help them, that's even better. Okay, so hope this whole process is helping you. And with that, I'll see you guys tomorrow, right? Tomorrow's Thursday, yeah, same timing, right? 10 p.m. 10 a.m. Okay, see you guys. Bye bye.